The US ISM Services PMI data for December increased more than expected to a high that was last seen in October 2024 that causes the Fed rate cut bets to be reduced for the April 2026 and March 2026 FOMC meeting, and therefore that actually led to a profit-taking activities that's being seen in the US stock market yesterday. Three major US stock indices closed down with losses, which is the Dow Jones Industrial Average, the Russell 2000, and the S&P 500, while the Nasdaq 100 closed almost unchanged. Mixed performance that's being seen in the Asia Pacific stock market today due to an uptick in US dollar strength that causes the Japan 225, which is the Nikkei 225, and the Hang Seng Index to be trading in the red as we are speaking right now, while the ASX 200 and the STI rose marginally higher. Gold continues to face downside pressure below a key resistance level at the 4,500 mark. Good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be the Thursday, the 8th of January 2026. So before we start, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so let us kickstart with what has taken shape yesterday in terms of the relevant news flow over here. All right, give me a minute. So just to make sure that everything is fine. Yeah, good. So let's start with what has taken shape yesterday in terms of the relevant news flow, data release, and the impact on the broad-based cross asset classes. So let's start with the in Tier 1 US economic data, which was the ISM Services Manufacturing PMI over here. So let me open up my screen so that you guys have a, yeah, I think the screen is good. Yeah, all right. So the ISM Manufacturing PMI over here came in at 54.4 for the month of December. So that is way above what market is expecting at 52.3, and also way above the previous November print of 52.6. So if you look at the trend of the ISM Services PMI, it actually jumped up significantly in the month of December. So at 54.4, it's the highest reading since October 2024 over here. All right. So May over here, this September, yeah, October. So previous print was October 2024 at 55.8. So there's a kind of a upward curvature in the previous month print of 54.4 for the month of December. So that actually indicate that the US economy is growing on a rather robust mode over here, given the fact that the services PMI data compiled by ISM is a leading US economic indicator that's centered on almost 3/4 of US GDP growth, given the fact that the US economy, most of it is driven by services activities. So with that in mind, that actually reduces the odds of a Fed funds rate cut bet for the March meeting. So we know that in the upcoming January meeting, market participants has already kind of priced in a stampede. So yesterday's strong ISM Services PMI data causes the stampede odds or the whole odds to actually increase much further from a previous day of 82.3, and right now it's almost at 88%, and only a marginal chance of 12.2% that the Fed is expecting to cut on the upcoming FOMC meeting, which is on the 28th of January. So this is based on the latest data from the CME FedWatch 2, taking into account of the trading price action of the Fed funds futures traders in the Fed funds futures market over here. And if you look down the aggregated tab, where we see the whole suite of probability for the other meeting dates in the year ahead. So previously, for the next meeting on 18th of March, which I shared with you guys yesterday, there was a slight chance of above 50%, which is around 54, 55%, that the Fed funds futures is expecting the Fed to do a 25 basis point cut in the March meeting, which is 18th of March. And that 55% chance has been reduced to less than 50%, now only hovering at 47.49% to what you call it, to reduce the odds of this potential rate cut or the fourth cut in total, given that the Fed has already cut 3 times in 2025. So that has been reduced, and given the fact that that has been pushed forward down, that the fourth cut may come in on the 29th of April 2026 meeting at a higher chance of 68% to bring the Fed funds rate down to 3.25% to 3.5%. But however, the minimum 2 rate cuts bets has been still intact so far. So given the fact that after that 68% chance on the 29th of April, potentially the Fed may do another cut, or quite the 5th cut in total, around a 60% chance on the 29th of July 2026 meeting, and a rather high chance of 96% on the 16th of September 2026 FOMC meeting. And by the end of 2026, which is the last meeting, the 9th of December, 65% or 66% chance the market participants is expecting the Fed to end the year with 3% to 3.25% on the Fed funds rate. So that also imply that 2 interest rate cut bets remains intact, at least for now. All right, but however, on the short-term intraday basis, that causes the excuse for the stock traders to participate in profit-taking activities yesterday, where the SPX recorded a loss of negative 0.34% after an intraday all-time high that was printed at 1 a.m. Singapore time. And thereafter, we see a sell-off in the last 3 hours of the US session. That also being followed by the Dow Jones Industrial Average, and as well as the Russell 2000 as well over here. All right, so the Nasdaq 100 managed to close almost unchanged. So however, what's interesting over here is that despite the sell-off in the SPX, the Nasdaq, the Dow Jones, and the Russell 2000 at the 1 a.m. Singapore time, support level are still holding for these indices. All right, so later I'll cover that in greater detail when I touch on the second segment of the daily dose. And what we could see over here is that we start to see the US dollar index started to bounce back again over here. So the US dollar index, I'll use this as a broad gauge of dollar strength and dollar weakness. So this is a daily chart of the US dollar index. So the US dollar index managed to surpass above the 20-day moving average. And for 2 consecutive sessions, Tuesday and Wednesday, it has a bullish candle. And right now it's hovering back to the intermediate resistance zone of 98.86 and 99.22, which is this previous bearish reaction on the 10th of December, where we start to see the last minor leg of decline earlier on. All right, from 9th of December over here. Okay, all the way down to the intraday low of 24th of December before this minor bounce take shape. So given the fact that it's still hovering this intermediate resistance zone, which is also confluenced by the 200-day moving average and the 50-day moving average. So what's interesting over here is that it seems to us to be floating back to this inflection zone ahead of tomorrow non-farm payroll data release, and as well as the preliminary University of Michigan consumer sentiment data due tomorrow as well for the US economy. All right, over here. So that's covered the first segment of the daily dose, which is centered on the ISM services PMI data that causes these 2 important movements in the FX market, and as well as the major US stock indices over here. So with that, now let me take you through the intraday technical outlook. All right. So before that, let me expand my screen so that you guys could have a better view of the charts over here. Right, so hopefully the chart is moving. All right, great. So let's start with the FX market first. Okay, let me expand the charts. Okay, starting with the euro dollar. All right, so euro dollar previously we do have a pivotal support level at around the 160.80 level, and price action now seems to be floating back up to the 160.80 level and getting very choppy in the last 2 trading sessions. But what's interesting over here is that it's still holding above the 50-day moving average, and we see the hourly RSI continues to hold above a parallel support over here. All right, trading in a series of a higher low. So indicating that there is no clear sign of kind of a very build up in this short-term downside momentum, but price action seems to be chopping above a short-term support zone or levels over here. So with that, for today, I will have a neutrality stance between 116.50 and 116.40, given the fact that it's coming very close to the 50-day moving average in the last few days of very choppy price movement that doesn't carry any sign of a build-up in downside momentum. And upper limit will be yesterday's Asia session high at the 117 figure level. We also tie with a psychological level as well. So neutral between these two zones for today at 117 figure level, 116.50, 116.40. Only a bullish breakout and the hourly close above 117 figure level will potentially trigger at least a intraday momentum bullish push up to retest the 20-day moving average, pardon me, at 117.28 in first step. Above this 117.28 may see the next intermediate resistance coming in at 117.65, which is the minor swing high area of 30th of December and 2nd of January this year. Only a bearish breakdown below 116.40 will see extension of this minor corrective decline sequence unfolding that has been taking shape since 24th of December to expose the next near-term support level at 116.60, maximum 115.90, which is the minor swing low area of 1st of December and 2nd of December. All right, so that's for the euro dollar. Next will be the sterling dollar over here. So the sterling dollar also continues to play around our short-term pivotal support yesterday around the 134.60, 134.60, 134.80 zone. But interestingly, it still hold above this rising 20-day moving average, and the hourly RSI has already hit the oversold region over here. All right, oversold region, and now intending to stage a bounce. So given this kind of mixed element, the fact that we may now see coming to the tail end of this minor corrective decline that has taken shape since the start of this week, which is 6th of January. So with that, I will have a neutrality stance first for today. Neutral between the 134.30, 134 figure level, which is confluence with the rising 20-day moving average and the minor swing low area of 31st of December and 5th of January, where it managed to stage significant intraday recovery at that point in time. And the upper limit will be yesterday's Asia session, we call it US session breakdown below the 134.90 level, all right, over here. So neutral between 134.90 and 134.30, 134 figure level. Only a bullish breakout and the hourly close above 134.90 level will start to see at least a intraday bullish exit to retest the minor swing high area of 6th of January at 135.50, 135.80 in the first step. Only a bearish breakdown below 134 figure level that would see a continuation of this minor corrective decline sequence that from the high of 6th of January extending further towards the downside to expose 133.65, maximum 133.20, which is the minor swing low area of 17th of December. All right, so that's for the sterling dollar, flipping to a neutrality stance for now as well. Next up will be the Asia Pacific currency, starting with the Aussie dollar over here. So the Aussie dollar right now is floating back towards the pivotal support level that I highlighted yesterday, which is also this minor ascending channel support that is in place since 21st of November 2025 low, right? Pardon me, over here. So given the fact that it's still holding above this short-term pivotal support level, let me delete this, right? So I'll be using this 66.95 short-term pivotal support level. So as long as this level holding surpass below on the downside, we are any hourly close below it, there could be still a chance of a bullish reversal scenario that could take shape today, at least on the intraday basis. So first resistance level to watch on the intraday basis will be yesterday's US session breakdown over here. All right, at the 11 a.m. mark Singapore time. All right, over here, this breakdown, this bearish candle breakdown that give rise to a series of intraday lower low. Right, so this level here will be the 67.33. Okay, let me put in writing 0.6733. Okay, 67.33. Right, pivotal support 66.95, no change. Maintain a potential intraday bullish reversal scenario. First resistance equal to surpass 67.33. Above 67.33, will potentially see a retest of January 7th of January minus swing high that confluence with the 11th of October 2024 high as well at 67.60 in the first step. Only a bearish breakdown below 66.95 will see the extension of this minor corrective decline from 7th of January, extending further towards the downside to retest the rising 20-day moving average that is confluencing with this next intermediate graphical support zone at 6670/6660 next. That's for the Aussie dollar. Okay, let me expand this chart. Next up will be the dollar yen. So the dollar yen continues to chop within our predefined neutrality zone that we have yesterday at 157 figure level, lower limit 155.90. So right now we start to see a bearish reaction of this upper limit of that neutrality zone again. So still no change, still expecting a kind of a sideways movement between this neutrality zone at 157 figure level, 155.90 for the dollar yen. Right, so that sum up the intraday situation or the outlook on the four major US dollar pair. Now let us touch on the major stock indices, starting with the Asia Pacific region, where we have will be the Hong Kong 33, which is the Hang Seng Index. So the Hong Kong 33 float back down towards our pullback support level, which is my second support level after the breakdown of the 2644 level, 26300 zone, which I have a very tight short-term pivotal support zone previously, and now it's float back down towards this important level, which is the 50-day moving average, and as well as this dotted gray line here, which is the pullback neckline, former pullback support of the former neckline resistance of this minor double bottom that was formed previously on 21st of November and 17th of December, shaded in the two green boxes, where it staged a minor double bottom bullish breakout on the 2nd of January, and now it's retesting this neckline resistance, now turning into a pullback support that confluence with the 50-day moving average. And very interestingly, it also starts to form a bullish hammer candlestick as well as we are speaking. Let me expand this chart as we are speaking right now, okay, at the 10 a.m. mark over here. So given that downside momentum has started to get exhausted, that is being seen overnight in the US session yesterday, and also with the hourly RSI coming into the oversold region as well, supporting a potential minor bullish reversal that may take shape at this 26197, 26107 pullback support of that former neckline resistance of that minor double bottom bullish breakout has taken shape earlier. So with that, I will use this as my first support level to watch out for. So pivotal support level will be at the 20-day moving average zone, which is the 25,915, 25,800 level. We also confluence with the lower limit of this ongoing minor ascending channel drawn from the low of 16th of December. So this will be my pivotal support zone for today. Okay, slightly below the neckline, the former neckline resistance of the double bottom now turns into a pullback support that confluence with the 50-day moving average. So watching the 25,915 for a maximum tolerance allowance in the case of any whipsaw on the downside, /800. So that will be my short-term pivotal support level for a potential intraday bullish reversal that may take shape on the Hong Kong 33 today. First resistance level to watch will be 26,440. So that was the sell-off and bearish reaction that takes shape after the close of the Asia session yesterday. All right, at the 6 p.m. mark over here. All right, 6 p.m. mark. So 26,440, maximum 26,656 on the intraday basis. Only a bearish breakdown below 25,915/800 level will see the extension corrective declines extending further towards the downside to expose the next near-term support in first step, the next intermediate support level in first step at 25,545, which is the minor swing low of 29th of December and 31st of December. If this level can't hold further, it will see a deeper slide to retest the double bottom low at 25,110. So that's for the Hong Kong 33. Very quickly will be the Nikkei 225 representing the Japan 225. So the Nikkei 225 now is actually testing our pivotal support level at 25,533 level over here. All right, so given the fact that it's now testing the 25,533 level and now fast approaching the next support level at 51,050, 50,720 level. So this will be the minor ascending channel support and as well as the rising 20-day moving average at 50,720. All right, this is the zone over here. So given the fact that there could be still a risk of a further slide over here to 51,050 level, given that there's an hourly close right now below 51,533. So that being said, on the intraday basis, we may start to see at least some form of weakness down towards 51,050, maximum 50,720. So let me adjust everything over here. So on the intraday basis, this level has already been taken out. Over here. So that will be my pivotal resistance. Okay, which is this former minor low that has been taken out during today's Asia session at 7 a.m. Singapore time, which is at 51,888. Okay, let me put it in writing, 51,888. So that will be my short-term pivot resistance on the Japan 225 representing the Nikkei 225. All right, let me put it over here, 51,888. Okay, 51,888. So as long as this 51,888 holds over here for the Japan 225 representing the Nikkei 225, there could be a further extension of this ongoing minor corrective decline within a uptrend phase, a minor uptrend phase that is still intact since the low of 18th of December, that is still trading above the 20-day, the 50-day moving average, and also above the minor ascending channel support. There could be a risk for the Nikkei 225 to shape or the Japan 225 to shape a further extension to retest the next intermediate support at 51,050 / 50,720 maximum, which is confluencing with the lower limit of this minor ascending channel and the rising 20-day moving average. Only a bullish reversal and an hourly close back above 51,888 over here that would negate or invalidate the residual bearish push down and see the revival back of the bulls again to shape a bullish reversal scenario taking shape on the Japan 225. With the next resistance on site will be the minor swing high area of 7th of January, which is at this 52,415. Above 52,415, we'll see en route towards the next intermediate resistance zone, which is the Fibo extension cluster level and the upper limit of this ongoing minor ascending channel at 52,775, 53,045. So that's for the Japan 225. Next up will be the Germany 30. So Germany 30, yesterday we do have a neutrality, we call it a neutral stance between this 25,065 and 24,670 over here. And it broke above the upper neutrality limit during yesterday's US session. And what we could start to see over here is that the hourly RSI continues to be held by a series of higher low, holding above this parallel ascending trendline support that has been in place since 29th of December. So with the bullish breakout above 25,065, we will flip back to a bullish buyer stance for today on the Germany 30 using yesterday's or Tuesday European session low over here at 24,860 over here, and also with this minor congestion area. Previously there was some form of hesitant by the bulls previously on 5th of January where there's a pullback, and the pullback staged a bullish breakout, and thereafter it tried to stabilize at this 24,860 before the next minor uplift took shape over here. So with that, as long as any minor pullback didn't shape a bearish breakdown and hourly close below 24,860 pivotal support levels, but I don't want to put my pivotal support to be so tight at 25,065 just in case of any whipsaw. So using a slightly much more important level at 20, which is much lower at 24,860. And this 24,860, if you do the Fibo extension of this rally from 29th of December all the way up to yesterday's US session high, that constitute the 38.2% Fibo retracement as well. All right, so as long as 24,860 short-term pivotal support holds on the Germany 30, flip to a bullish buyer stance back again for the next resistance to come in at 25,433, pardon me, 25,433, which is a Fibo extension cluster level. A breakdown below 24,860 will invalidate the bullish buyer space to see another round of corrective decline sequence unfolding within this uptrend phase that is still intact, to retest the next near-term support level at 24,670, followed by 24,430, which confluence with the rising 20-day moving average, and as well as the lower limit of this minor ascending channel drawn from the low of 21st of November. Okay, so that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30, that's representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average yesterday, we do have a very tight short-term pivotal support for a risk management perspective at 49,250. It broke down and shaped a lower low, a push down over here to retest the minor range resistance. Now turns into a critical pullback support level. All right, so this was the kind of a former minor range resistance where it traded sideways from 12th of December to late December and early January, before that bullish reversal takes shape. So this will be a pullback support to level to watch out for. So right now, given the fact that I don't want to put my pivotal support level to be so tight at 48,770, 48. Okay, so it's actually 48,870, 48,770, right? It's a bit of a reversal. Okay, let me put it in proper chronological order. Okay, 48,870, 48,770. I'll push it slightly lower to 48,480, which is also confluence with the rising 20-day moving average over here. So using 48,480 as my short-term pivotal support level, there could be a chance of a bullish reversal on the intraday basis for the potential US Wall Street 30 representing the Dow Jones Industrial Average to resume its bullish tone. First resistance level to watch will be at 49,250. Above 49,250 will potentially see it en route towards the next intermediate resistance level, which is a Fibo extension cluster level, and the upper limit of this ongoing medium-term ascending channel drawn from the low of 23rd of May 2025 over here at 49,805. 49,805/49,840. Only a bearish breakdown below 48,480 will see the minor corrective decline sequence extending further towards the downside to retest the previous bullish reversal area of 2nd of January. That confluence with the minor swing low of 19th of December and also the rising 50-day moving average at 48,100 and 47,870, and also this dotted green line here, which is the median line of this medium-term ascending channel. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 rallied over here and broke above this former minor swing high of 6,920. So with this breakout over here, and the pivotal support area will still be around the same area at 6,900/880, which is also the rising 20-day moving average as well, and also this lower boundary of this ongoing ascending channel drawn from the low of 21st of December. So as long as this 6,900, 6,880 short-term pivotal support zone holds, still maintain that bullish bias on the SPX 500 with a new fresh all-time high that was printed at 6,690 over here, or 6,000, given that the intraday high is 6,973. So if you don't take the body, if you take the body, you'll be at 6,969 over here. All right. So first resistance level to watch 6,969. A breakout above it will potentially see the next intermediate resistance at the psychological level of 7,000 and 7,005. which is the 0.764 Fibo extension from the low of 18th of December. Only a bearish breakdown below 6,900/880 and the hourly close below 6,880 will invalidate today's bullish reversal scenario on the SPX 500 to see a deeper minor corrective decline, exposing the next near-term support level in first step at 6,822, which is confluencing with the rising 50-day moving average as well. So that's for the SPX 500. Lastly will be the Nasdaq 100. So the Nasdaq 100 yesterday push up but can't break above this all-important stubborn range resistance that has been in play since 8th of December last year. All right, and previously also got rejected on the 26th of December. So after it hit this level, it did a drift down and retest the this intermediate support zone coming in at 25,600 level mark over here. So given that it can't have a proper breakout above 25,830, I don't want to tighten my pivotal support. So still remains the same at 25,350, which confluence between the 50-day moving average and the lower limit of this ongoing ascending channel that has been in place since 21st of November 2025 low. Only a bullish breakout above 25,830 that I could tighten it, the pivotal support level towards this 25,600 level. All right, so for now, pivotal support level remains the same, still maintain that bullish bias. So right now, for sure, the bulls, in order to gain better traction or increased chance of a continuation of this ongoing minor impulsive upmove sequence from the low of 2nd of January, it got to have a clear breakout above 25,830 with an hourly close above it for it to seek out the next intermediate resistance at 26,070 in the first step, which is this former minor swing high area of 3rd of November over here. All right, 3rd of November, pardon me. Only a bearish breakdown below 25,350 and the hourly close below it will invalidate today's intraday bullish reversal scenario to see a deeper minor corrective decline, extending further towards the downside to retest the 2nd of January minor swing low area at 25,133. A breakdown below it may see further weakness towards 24,870 next. So that's for the Nasdaq 100. Next up will be the commodities market, starting with the gold XAU/USD. So gold yesterday we do have a bearish bias below 4,485, excess 4,500. Price action drifted down towards the first support zone, which is at the upper limit of 4,430, 4,003 over here. Right, so still no change, still maintain that bullish, still maintain that bearish bias, pardon me, not bullish. I repeat again, still maintain that bearish bias for a potential, we call it bearish reversal, taking shape back down towards the lower limit of the back down towards the gap up support on Monday and the previous last Friday minor swing low. So first support level to watch will be at the 4,403 level over here. A breakdown below 4,403 exposes 4,333, 4,309 next. All right, and also the hourly RSI continues to be kept below this former ascending channel, ascending trend line support, now turns into a pullback resistance that got rejected twice yesterday. So still watching the 4,485, 4,500 short-term pivotal resistance on gold XAU/USD for a potential minor bearish reversal scenario to unfold. And these odds will start to get increased with the breakdown of 4,403, exposing the next near-term support level in first step at 4,333/4,309. Only a bullish breakout above 4,500 will put the gears back to the bulls again from the first step to see the retest of the current all-time high at 4,550, 4,560. Above 4,560 may take us up higher towards a next Fibo extension cluster level at around 4,645/4,684 next over here. That's for gold XAU/USD. Next up will be the West Texas crude oil. West Texas crude oil, yesterday we do have a bullish bias expecting for it to bounce to take shape back up towards the upper limit of this sideways range configuration that has been in place since the 16th of December. So price action continues to maintain above our pivotal support at 55.75. And right now we start to see a bullish divergence on the hourly RSI. So still no change, still maintain a potential mean reversion bounce back up towards the sideways of the towards the upper limit of this complex sideways range configuration in the short term basis. 55.75 short term pivotal support. First resistance level to watch out for today will be yesterday's US session high that confluence with the Asia session high as well at 57.15. All right, over here, 57.15. All right, so above 57.15 will increase the odds for the mean reversion rebound potentially to extend into the upper limit of this sideways range configuration, 57.74, 58.2 next. Only a bearish breakdown below 55.75 was invalidate this potential minor mean reversion rebound towards the upper limit of this sideways range and see a further bearish breakdown towards 55.23, maximum 54.50, 54.50 on the intraday basis. So that's for West Texas crude oil, and also sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar to see what are the key data to look out for today. All right, so today will be the Thursday over here. So at Thursday at 1 p.m. Singapore time over here, you have Japanese consumer confidence data for December. So market is expecting a slight improvement to 37.8 from 37.5 that was printed in November. So that could potentially influence the dollar yen rate and as well as the Japan 225 CFD index. And stretching out further into the European session, we have an ECB official speaking, ECB Gando's speech at 4:30 p.m. Singapore time. And thereafter, we have some Eurozone data to take note of. Economic sentiment data for the month of December, unchanged, and consensus is expecting an unchanged figure at 97 from the previous month print of 97 as well. And we have tier 2 inflation data, PPI data year-on-year for November. Market participants is expecting a slight dip to negative 1.9% year-on-year from negative 0.5% year-on-year in the previous month of October. So that could be some form influence the euro dollar and the euro crosses movement. Then heading towards the US session over here. So the US session, we do have some tier 2 employment data, the weekly continuous jobless claim data, which tend to be much more volatile because it's kind of on a weekly basis. So that will be at 9:30 p.m. Singapore time thereafter. And thereafter will be a rather quiet US session, no US Federal Reserve officials speaking for tonight over here. And heading into the Asia session tomorrow, we have an important tier 1 Chinese data, which is the inflation rate and as well as the PPI. So for inflation rate year-on-year for December, market participants expecting a continued improvement to 0.9% year-on-year for December, a further uptick from 0.7 that was printed in November last year. And the PPI for December is expected to slow down the deceleration to negative 2% from negative 2.2% year-on-year that was printed in November. So if it comes in within expectation, that could continue to see that narrative of that deflationary risk spiral getting diminished in the Chinese economy, which eventually will be positive for China-related stocks and as well as the Hang Seng indices. So something to take note of at 9:30 a.m. Singapore time tomorrow before the start of our daily dose. So that sum up today's daily dose of market insights. I'm Kelvin here signing off, wishing you guys a great day ahead, and we shall speak again tomorrow. Thank you.